All right, good afternoon, everybody. I am Stephen Lum, partner here at Ampersand Accounting, here with Peter Mantell. Happy Friday to everybody. This afternoon, we're going to go ahead and discuss cryptocurrency and how it applies to sales tax, how retailers can remain competitive in the ever-changing sales landscape. So hopefully you have lots of great questions for us, but please go ahead and save them until the end. We'll try to answer questions as they come through, but if you can, hold them till the end, and then we'll get through this nice and smoothly. And if anybody's having any issues with hearing us or seeing us, go ahead and let us know in the chat box. That would be fantastic. So let's start with what is cryptocurrency? So cryptocurrency is a form of payment that can be exchanged online for goods and services. Many companies have issued their own currencies, often called tokens, and these can be traded specifically for the good or service that the company provides. So think of them as an arcade token or a casino chip. So generally, you would need to exchange real currency for these for cryptocurrency in order to access the good or service that the company provides. Cryptocurrencies work using a technology called blockchain, and blockchain is a decentralized technology spread across many computers that manage and record transactions. Part of the appeal of this technology is its security.
Yep. And I would take it even further, Stephen, to what you're saying there, which is that, if you want to make it even more mundane, it's a unit of measurement that's being conducted through that blockchain technology. And effectively what occurs is that it acts as a ledger system. So the way blockchain operates is that when I conduct a transaction, there are various different computers, systems that are connected to that blockchain, if you would, depending on the brand and type you're using. You'll hear terms like Bitcoin, Ethereum, Doge. You'll hear a lot on the Doge side, as that's a popular, what they call meme coin. And then you'll also see more well-known individuals like Elon Musk jumping into the fray and doing what they call pumping it, which is effectively when he makes an announcement in relationship to it, it generates demand and value in that asset, but it's also viewed as a form of manipulation. So yeah.
Absolutely, that is, we have seen Elon Musk a lot recently in relation to cryptocurrencies, and it's an effective marketing tool as well, actually, if you think about it. For sure. But carrying on, there are more than 6,700 different cryptocurrencies traded publicly, according to CoinMarketCap.com, and they are a market research website. And cryptocurrencies continue to proliferate, raising money through initial coin offerings, or ICOs, which is basically the crypto version of IPOs. Mm-hmm. The total value of all cryptocurrencies as of April 13th, 2021 was more than 2.2 trillion, according to CoinMarketCap. And the total value of Bitcoins, the most popular digital currency, was pegged at about 1.2 trillion.
Yep. Good stuff. So let me kind of dive in a little bit into why the cryptocurrencies are popular. So, we've seen different, in the investment world, you'll hear a term called catalysts. And so when investors are making investments, they look for quote unquote catalysts, or components that will create a perception of increased value. So, that is no different to the cryptocurrency market as well. And so a lot of different people, investors, et cetera, have been viewing crypto not only as a favorable tool, but we see that they're finding different ways to benefit and leverage them. So some examples would be, using or handling of Bitcoin as a unit of measurement or as a unit for profit. We'll see it's also a way to move away from central banks. And, this is where some people will get a little concerned about that area. But the objective is that when it comes to crypto is that when I want to wire transfer money to an employee or to somebody else, I have to pay a fee. And at times that fee can be pretty hefty. Whereas I have a means to do money transfers directly through crypto and avoid those set fees. Now, some people say, well, what about the fluctuation of crypto? The answer to that is that you can use what they call stable coins, which is pegged to the US dollar. And so it won't fluctuate per se, but you get the benefits of transferring that money for next to nothing. Then from there is the technology aspect, which is blockchain is starting to gain traction from a platform perspective and utilization for retail or for various different components. We're starting to see blockchain utilized more for gambling, casino sites, retail sites. Some entities are starting to create their own unit of currency. So like Facebook has their rendition, and some of the other big companies you'll see develop currencies or other things in relationship to their technology so that it drives demand or users to use their technology. The benefit to the entities that own that blockchain technology, even though it's very secure and the data is also equally secure, the big thing though for many of the users is the ability to have that decentralized location where they feel they're a bit more protected versus other solutions. Finally, the next step or the last piece to this one is that, then you have people that speculate against crypto as well. So you have buying or shorting of crypto assets similar to what you would see on Wall Street. The one caveat I will say is that when we look at the IRS and how they define crypto, they have defined it as a unit of property. So as we continue in this conversation, that should be something that we should have sitting in the back of our heads, if you would. The next thing is how are we transitioning into a world that's accepting crypto? And at this point, what examples can we see of entities and organizations and how they're adopting it? So the quick adopters, I would say, are usually technologies or solutions that have been long since operating online and have or stand to benefit from e-commerce related transactions. So some of the bigger brands that you may see on this list, for example, we see Dish TV, AT&T, Etsy's in there, Shopify is on that list. In food categories, we see Subway, et cetera. QuickBooks accepts crypto, PayPal now accepts it, et cetera. So there are many different solutions now starting to pop up to accommodate as people are becoming much more diverse in their portfolio and have crypto assets. And so as a direct result of that, as the demand continues to go upwards, companies are also finding it lucrative or beneficial to accept crypto as a form of payment. Obviously, the popular one that everybody knows is Tesla. And then Tesla earlier this year announced at one point that it was putting 1.5 billion into Bitcoin, only to this week alone transition from Bitcoin to potentially another unit-based measurement because of the fact that they felt that Bitcoin today is over-consuming energy and then forcing additional utilization of fossil fuels, which is the whole counter argument for why we'd have it in the first place. So the question then for retailers is cryptocurrency currently gaining traction? And the answer is a resounding yes. MasterCard, Visa are starting to jump into the fray to offer different services in relationship to it. PayPal acquired FTT, I believe, or FTX, which is a form of currency. And now they utilize that as a way to transfer crypto. And so, we're seeing much, much more demand and interest in entering into the digitalization world. We are now starting to see, as we read here, that 2/3 of the respondents, nearly 63% report having tried to make a payment or using a payment method that would have included crypto. So we're starting to see aggregate demand in different fields as well. Just gonna come up for air for a second there, Stephen. Did you have any questions?
No, I'm good. Peter, you being the subject matter expert here, your your take on crypto is basically that it's the way of the future.
Yes. It's not a secret I'm invested in crypto. And the reason why I feel that it has a lot of potential to be the way of the future is when we look at different data points in relationship to how it's starting to be utilized. We've heard the feds in conversations term crypto as a way to create diversity for underprivileged individuals that may not have the means or ability to get credit cards or to get a bank account. This is a very seamless, simple way for those individuals to be able to enter into a means to have a digital capacity, if you would. The flip side is that it's much simpler to generate and maintain than what we would call fiat currency, which would, in the term of fiat currency, is governmental, governmental related currency. And so one of the big issues there is that when we look at this changing landscape, and the pandemic also kind of propelled things forward pretty quickly, which is people are starting to move away from wanting to physically handle money and moving towards a preference of just taking my iPhone, have a Face ID, and it just remits the money directly to whoever I want it to. And I can decide what kind of currency or what kind of revenue I want to remit to that individual, US dollars, crypto, et cetera. So instead of having to carry money around with me, which then creates the potential for losing it, for misspending it, for not keeping track of it, I now have the ability to not have to lug that around, but rather just carry my iPhone with me and do whatever I need to conduct those transactions. That simplicity of use is what's garnering more and more demand for crypto, because as it continues in this path, if you would, we're starting to see now even central banks from Europe to adopt or create their own cryptocurrency because they realize the utilization and the benefits and rewards of having so. So go ahead, Stephen. I don't know if you had any.
Oh no, I'm good. I'm good. So moving on to cryptocurrency and sales tax. So the question that a lot of people ask is, if I accept crypto, do I need to accept sales tax on crypto? Now, if we look at the three states that we have listed here, we have New York, New Jersey, and California, and these are historically very aggressive states in terms of tax enforcement. So with New York, sales tax is determined. Sales tax determined by fair market value of the digital asset at the time of sale. Now, Peter, what does that necessarily mean for the everyday business owner that's not aware of how cryptocurrency would be taxed on the sales tax side?
So what occurs usually in this kind of environment is the states are saying, we understand that crypto can fluctuate and go up or down, if you would. And so, because of that volatility and fluctuation, depending on the currency you're carrying at any given time, states like New York, New Jersey, and California have said, okay, what you do is you take a snapshot of the dollar value at the time of the transaction. And we're going to get a little bit more in depth into that. Actually, I can go into the other slides, actually go into these explanations. So if we look at New Jersey, they actually have law that support this with TAM 215.1. And then specifically what Jersey had said is that if you're getting compensated for crypto or Bitcoin just to have Bitcoin, it's not subject to sales tax. But what occurs is that if you're doing an exchange of a tangible physical property or anything like that, then at that point, that is considered a transaction as far as the states are concerned. And so as a direct result of it, what these states are saying is, because we cannot measure crypto, we have to have that US dollar pegged to it. And then that we run that percentage against that US dollar amount. And so this kind of creates some complexity here because retailers now will say, okay, so that dollar amount, is that at that exact time? Is there wiggle room, et cetera? When we look at the platforms, and we're going to jump into that one, that help in the acceptance of cryptocurrency, Coinbase, BitPay, Shopify Gateway, Square, PayPal, et cetera. In some cases, you're already, if you have a Shopify store, have a means to accept crypto if you wish to do so. And yes, I ripped this one image off of Clearly Payments, but I felt that this infographic was extremely insightful and helpful for us. As the demand continues onward for retailers, so are the solutions and tools available for retailers to accept crypto. And in these tools, in some of these environments, they even allow for you to add sales tax as a component when processing the crypto. So for solutions such as like Square or Stripe, once you define that you're going to accept crypto, you then have the means to be able to say, from an invoice perspective, please add or include sales tax. Then what happens is, once they've gotten that and we go right into the profit or into the process, what occurs then from there is that your system needs to make sure that it's properly recording it, any and all transactions that may occur, and have a means to be able to submit it to the states. So when we look at this kind of a process, if you would, the first piece is to make sure that you're able to pin the transaction to a dollar amount. So in other words, if you're a retailer and you are accepting crypto and you find a low cost ad hoc solution, it would be detrimental to use a solution that doesn't allow for you to pin a dollar amount at the time of the transaction. Furthermore, in my personal opinion, or our opinion as a firm, there are solutions now already out there that allow you to collect sales tax, or pre-ingrained in the collection process of the cryptocurrency. And for the interest of simplicity, we feel that that is a much simpler solution and less risky, if you would. Trying to figure these things out ad hoc is extremely dangerous for an entity. So part of what we're going to, what we advocate for is that you need to utilize tools that are going to complement what you're doing and not just going to help you get the money in the door. Some retailers sometimes get very ambitious and aggressive in that area and say, okay, we're just going to accept crypto without thinking about the ramifications of accepting such thing. You need to make sure that your infrastructure is in place to support that properly. When processing sales tax amounts, what we were discussing, this is a complex subject because there isn't a lot of definition from a law perspective. This is still in flux. The IRS has some basic definitions as far as that it is property, but they're quickly finding that their definitions may run out of context quickly, because one of the biggest issues when it comes to crypto, when you use solutions like Coinbase, is the fact that you can transfer your currency instantly at no fee from one type of currency to another. From a capital gains perspective, this creates a lot of complexity because at any given time, you can easily conduct 5 transactions in the matter of less than 5 minutes. And so this leaves a version of exposure. One of the things that people will ask is, well, what's the difference between then accepting crypto for payment versus utilizing crypto as an investment? And the answer is that in the same way that you do it with the US dollar. So in other words, if you receive US dollar currency, you would treat it as such. If you have it in an investment, then you're going to also treat it accordingly. It's most likely going to be in an investment environment, et cetera. Crypto is no different. So when you're accepting crypto as a way to compensate for goods or service, you treat it like you would just getting paid in the US dollar, if you would. And that's where we get into, okay, how does this all fall then into the state's definitions, and what can or can't the states do in an environment like this? So first and foremost, if you're collecting those transactions and you are capturing that data and that information, at a later time, you're still going to have to report it to the states, because that is revenue that was gained by your business. And as far as the states are concerned, their constituency should be paying sales tax on that inventory that you sold them. So as far as the states are concerned, yes, it's taxable. Now, as far as defining the currency, we haven't seen state or federal government explanation as far as, could you use crypto, or what crypto would mean from a currency perspective or acceptance. So when we went back and we look at the California, New Jersey, New York example, what the states have done in that capacity is they've simplified it and dumbed it down a little bit, and saying we're just going to track strictly the unit of measurement with this, and we're not going to overcomplicate it. And so what we're going to do is we're still using US dollar as the currency to track and monitor and to measure how this crypto is performing. Then we go into, does this mean that a state has something to go after? And, can they go after sales tax owed on crypto transactions? And the answer is a resounding 100% yes. There is no question or doubt in our minds that the states can and will be able to seek revenue from crypto-related transactions. Because when you look at the state's definition from sales tax or other components, it does not specify the type of transaction. We also see, as an example of this, to kind of give you an understanding, is typically when you give out, as a retailer, you may give out samples, and you may be giving those away for free. But even then, the state expects you to collect or remit sales tax, or you're still on the hook for sales tax for those samples. So even though no currency was exchanged there, that sales tax was due. Drawing similar comparisons to that with crypto, though it may not be in a dollar unit of measurement, there is a way to measure it against the dollar. And so there is a declared value for this, a fair market value, in which case they can say, yes, this transaction is subject to sales tax. When and how we're going to see it happen, we don't know yet. States are still kind of waiting on the feds to kind of give additional definitions, and then from there, make their interpretations and recommendations. But the one thing that we can certainly say right now is that everybody is in a bit of a holding pattern and keeping an eye on the feds in relationship to this currency. And we do expect some policy to come out this year in relationship to crypto and further defining it from a transactional perspective. The next question will be, well, what about economic nexus in crypto? So in other words, if we look at economic nexus, that's physical nexus is where you have a person, place, or thing that is operating within the confines of that state physically. Economic nexus is when you have a certain dollar amount, either by transactions or by revenue, in which case then the state says that is sufficient enough for you to establish nexus when you hit that de minimis threshold. So that being said, when it comes to crypto and nexus, the transactions are still being conducted and they're still counted. And because of the fact that we can pin a dollar amount to those transactions, we can track the value of expenses within that state, or the number of transactions. And in light of the fact that we can count the number of transactions regardless of the cryptocurrency, means that we have a number count as well. So when we look at the state laws, when it comes to economic nexus, the state laws do not define that these transactions must be made in US dollars. They just say that this is our role when it comes to these types of transactions. So regardless of whether it be a barter, crypto, anything that falls under the category of what they define as transactions, you're still subject to in the sales tax part. So, then we get a lot of questions after that is, well, that's awesome. We want to jump into crypto, or we see the value too. And if nothing else, just the ability to be ahead of the game. We may not get a lot of transactions, but we want to be ready for it. And so, you may ask, well, if in the event we do accept it as an entity, could ampersand support that? And the answer is a resounding yes. It's a bit more complex to handle than your average run-of-the-mill sales tax that you would have with an Amazon platform or Shopify, et cetera. But we have a means to be able to declare a dollar value, and we work with each client on a case-by-case scenario. Obviously, with any and all of this advice, we strongly recommend that you speak with your accountant or financial advisor prior to making a decision of this nature. The reason being that poor individual is going to have to support it after. And so we want to make sure that, as a client, if you do make that decision to go into crypto, that you are fully aware and you can confirm that your financial people can support it. That is what I have from there. I don't know if there are any questions.
Now, there aren't any questions right now, but one question that I think might be helpful for people that are completely new to crypto, that are interested in crypto, that have heard or have seen, in the headlines, crypto just taking over, skyrocketing in value. Now, earlier you spoke about cryptocurrency used as a form of currency versus an investment.
Mm-hmm.
So what is it about cryptocurrency that makes it where one Bitcoin can be one Bitcoin versus one Bitcoin can be like thousands of dollars?
Mm-hmm. So, go ahead. You were going to say something.
Oh no, that's pretty much it right there. Well, how can we help? How can we help the viewers out there understand the difference?
So we have to simplify this, and we have to break it down to a unit of measurement that we understand and that the governments will understand. In that kind of environment, that's the US dollar. That's what governments understand. And so if we can peg the crypto to that dollar unit of measurement, which most platforms do in this time and age, then we know from that perspective what that transaction was worth, and we can declare value. The states have confirmed, or some of the local governments have confirmed, that if in the event a transaction is conducted and there isn't sufficient data to support the transaction as far as the state's concerned, because they can't determine, was it shipped anywhere, was it, et cetera. In those kind of environments, that's where you're going to find yourself. The states are just going to go to the old school rules and return to, okay, what's the dollar value?
Okay. All right. That's awesome. We have one question that came through, and the question is, what does it look like to take crypto for really small dollar amounts? Like, I want to take $5. What does that look like?
Great question, from Jennifer. And the answer is that the unit of measurement within crypto, they call it Satoshis. And what you see with Satoshis is that in certain cases, it goes, if you had a percentage, or if you had a point there, we measure dollars typically up to 2 units from the point. So our cents are 0.01 cent, 0.02 cent, 0.03 cents, and that's 3 cents. When you look at the unit of measurement with crypto, it can go as far as 8 decimals over. And so that unit of measurement, as far as accepting smaller dollar amounts, still remains intact. It gets actually quite granular, and you'll see, for example, if you were accepting a Bitcoin, 0.000000326 or something like that. And so they can measure all the way down to the most minute level, which is another area of flexibility in the sense of, or another area of benefit, if you would, of collecting crypto, because even though a Bitcoin might be worth $50,000 per unit, you can still exchange Bitcoin on a $5 transaction. So that's a great question there.
And we have another question here from Tim asking, how do you go about identifying the next Bitcoin? It seems a bit like the wild, wild west. So how do you go about identifying which digital currencies have potential?
So that's a great question. And I don't think you try to anticipate currency. Most governments offer, or most of the blockchain solutions this day have what they call stable coins. And that stable coin is pinned to US dollar value. So, what you can do is, if you are concerned about that fluctuation, And Tim, you're dead on with that Wild West. I mean, one day it's down 10%, the next day it's up 2%. And that's the last 24 hours, by the way. And the scary thing with crypto is some buddies of mine, we talk about this, and there's no breakers in place. When you look at the stock market, there are breakers in place. So you hit below a certain threshold, it stops the market for a certain period of time, stops the momentum, you're done. Typically 15, 30 minutes, depending on the decline. On crypto side, there are no breakers. There's no stops. So when it goes down, it goes down. When it goes up, it goes up. There's no way to stop the volatility. So to answer Tim's question, you stay as close to stable coins as you can. Examples would be USDC is a form of stable coin, the USDT, which is a tethered US dollar, as an example. Binance or some of these other coins have stable coins. And so what you would want to do is, if you accept the transaction in another currency, for the reasons of simplicity and not having it fluctuate, with such, grand volatility, if you would, we would recommend, as soon as the transaction is conducted. So if you took Bitcoin, immediately convert into the stable coin, into USDC or USDT. That would help you in ensuring that your business doesn't get hit with a nasty fluctuation, if you would, later down the road.
Now, real quickly, since you touched upon USDTs, what is the difference in a tethered USD?
So a lot of these different units of measurement are based off of the blockchain they operate within. And so we see a lot of the current stable coins right now today are on an Ethereum-based blockchain. Ethereum right now is a very popular one, along with Bitcoin, as far as being considered a secure way to transact in business. And so, within those systems, the way it works is that when you buy a stable coin, they literally put $1 into the US government account. And so that stable coin preserves that dollar amount. So it's pinned one for one with the dollar, regardless of if you want to use one stable coin versus the other stable coin versus the other stable coin. Really what connotates the difference in name and reputation is nothing more than the fact that they're just operating on a different blockchain from one another. But the real emphasis there, though, is that stable coins should not fluctuate at all. They should remain at the dollar mark, maybe like 0.005% fluctuation at most, but that's the extent of it all. They're going to stay pretty close there.
It's great questions that we have today.
Yeah, I'm loving them.
Yeah. Now, for those who understand how traditional currency works, where we have money that is it's printed coins that are pushed out. How do you help people understand that cryptocurrency isn't just made up fictitious money that's just created by people on the internet behind screens, and that you're not just taking in phantom value, if you will?
Yeah, vaporware.
Exactly.
Yeah, I feel you. So it's interesting when it comes to this, what is value? And this has become, now we get into philosophy, because it comes down to supply and demand, in my opinion. And so, when there's demand for a unit, whatever it be, it could be crypto, it could be widgets, it could be whatever, the value or perception of value will go up based off the demand for it. It's no different in the case of crypto. We hear a lot of comparisons to physical assets like gold versus crypto, and why would you not just remain flush in gold versus cryptocurrency? And the answer is that when you invest in gold in this time and age, and the responses that we've seen from the communities, when you invest in gold, it's not that you get a gold bar for your money. You don't get any gold. You have a unit of measurement of that gold that says that if anything happens, then the gold is, that unit of measurement is yours. In prior years, gold and precious metals have been used as a way to hedge against inflation or deflation, et cetera. So by maintaining your position in gold, that was kind of utilized as a stabilizer, if you would. It's interesting, and this is an area where many investors or a lot of experts I feel are missing the ball. And that is that if you look at the younger generations that are up and coming, the new spenders into the market, typically these are younger generations that are used to acquiring assets digitally. Some examples I might give is like Fortnite, where you'll see them playing their video games and they want to get new packs, they want to get new clothing or other things, and they're willing to spend US dollar on those products. And so what happens is that even though they're not, quote unquote, by definition, getting something physical, they are getting something digital in exchange for it. And so, one of the things that I think does have to happen is, as a business owner, as an entity or company, you have to have a bit of a paradigm shift away from that thought process. And you'll hear terms in philosophy and business talking about the smart machine age versus industrial era thought process and infrastructure. We're kind of going through a bit of a renaissance period right now, where we're seeing the push for machine learning and AI and et cetera. As that continues to grow, your run-of-the-mill currencies like a dollar or other things will fall by the wayside, because you're not going to be able to get the same amount of analytics and data later down the road like you will be able to with digital transactions.
You know what? And that's actually a really great analogy, using Fortnite, because a lot, like you said, we're moving towards a newer generation of younger users out there. And for all the gamers out there, we come from the generation of gaming where the Ataris and the Super Nintendos and all that built that foundation for us to be where we're at now. So a lot of the gamers out there will be able to relate to that, where you're spending real currency for digital property. And we see that with NFTs right now, with non-fungible tokens, and things like NBA Top Shot, where they are taking these digital moments and these are replacing the traditional, paper trading cards. A lot of people have a lot of people that remember collecting baseball cards, basketball cards, and things like that. That's all going to go away because everything is digital now. We've seen Jeff Dorsey of Twitter sell his very first tweet for I believe it was like 1 point something million dollars. I can't remember the exact amount, but we see memes that are out there now that are being sold. The originators of viral memes that are being sold as essentially non-fungible tokens. So we're seeing, like you said, a renaissance where we're moving into, and we're moving quickly into, a very, very digital age.
And not only that, Stephen, but we're also seeing people aren't afraid to spend serious amounts of money on these
serious
NFTs.
amounts.
One art project, a guy dropped $68 million on for that digital asset. And so, that's another thing that's creating more value of perception in this market, is the fact that we're seeing large dollar amounts being thrown into this market. And so, because of that, the perception and the value just keeps going upward. And so, yeah, that's a great insight, Stephen.
Let's see. I don't think we have any other questions right now.
Well, what I would say, we'll leave it going for one more second for everyone to ask questions if there's any more that remain. But I think that our final take and conclusion is that, as a business, or as business owners, or if you're supporting businesses and business owners, we feel that cryptocurrency is going to continue to be a very popular subject, at least for the next 5 to 10 years, and will be more prevalent in transactions as they continue to grow. This whole crypto thought process, for many that are kind of adverse to it, if you're in the e-commerce space, you should be able to understand the necessity to adapt to new technologies and ways of operating. Just 10 years ago, e-commerce was a blip on the radar, and the ability to transact and conduct a transaction online. And people always would say, well, if I can't touch the clothing, if I can't feel the clothing, if I can't hold the clothing, then I'm not going to buy the clothing. If I can't wear the clothing, then I don't want to buy it. And so the argument for the longest time was, oh, if I can't physically have it, I'm not going to buy it. And yet here we are, and Amazon during the pandemic and some of these other situations has grown exponentially in this environment. Yet, you're not able to touch it before you actually get it. You get it, and that transaction is considered completed. So we are seeing business models, what I would refer to as trust, much more trust in the currencies, in the way to transact and conduct it. And so, similar to what we've seen with the e-commerce in the last 10 years, we think that crypto is going to be a very integrated part with the businesses going forward.
And speaking of trust, Tim would like to know, do we have a trusted source for digital currency information that does a good job of summarizing the news for someone without a lot of time to study it in detail?
That is an excellent question. And so, there's a lot of very good material in locations like certain exchanges called Coinbase, et cetera. But you're now able to find information and news on crypto in the more mainstream media. So Wall Street Journal, Forbes, Bloomberg, a lot of the mainstream media now is starting to cover crypto from an investment standpoint. And so they're offering very good materials for layman's terms. One of the other things that we're starting to see more prevalent in is courses now being made available for those that may not have any background or experience in it. And so you can go to like a Udemy and take some very basic courses on what crypto is and how to utilize it. Crypto is one of those things that you really want to utilize the technology you have at your disposal. So a Stripe, a Shopify, a PayPal. And the reason is that, handling crypto transactions, if you don't know what you're doing, can be dangerous and detrimental in the sense of that you can misallocate the funds to one direction like you could with a wire transfer. Once those funds leave the account, they're not coming back. So utilizing tools that help you protect and shore up your business in that area are critical. And kind of going back to what we discussed, payment processing solutions are where you're going to protect your business there in that area.
So in short, we don't have necessarily a localized
Depository.
for some of this information, but there's a lot of great information out there on the internet. And like Peter says, there are courses that are coming out now, which have also been on the rise in recent years. We see a lot of courses out there, things like master classes on YouTube. There are a lot of different avenues for obtaining the information that we need to have to become experts in our own right in regards to cryptocurrency.
100%. And I think that honestly, you also there's a component here that as a business owner or member of the business, when you're making this level of recommendations, to do your own due diligence as well. Don't just take what we're saying here as the word, if you would, but also conduct that research for yourself in finding out if that best utilizes your clientele in your industry. So, to what Steven's saying there, like crypto, it's decentralized the information. So there are many different sources to get information, but I typically go to the basics, like a Coinbase. And in some of those environments, they'll actually pay you to watch their videos and learn how it works. So for example, and I'm not endorsing Coinbase by any stretch of the imagination, it's just a tool I've utilized in the past. But I believe there's like $40 worth of free crypto there if you sign up, and you can start to get into the system and better understand how it works. And so one thing that I would strongly advise people to do, if nothing else, is get into some kind of an account or into some kind of platform where you can actually see it in action a little bit better, so that you can better understand it. Reading from my perspective only takes you so far, then you have to kind of see it in action.
Fantastic, Peter, fantastic. If we don't have any other questions, I would like to thank everybody for your time today. Thank you for everybody that has attended this webinar. We hope that the information that we provided to you is insightful, is useful eye-opening, and I hope it does encourage you to look a little bit more into cryptocurrency, because as we mentioned earlier, it is looking like the way of the future right now.
Me personally, I'm all in on it, but I could certainly understand the reservation. But for me, I think it's a very cool thing, and we're witnessing history here in the making as we're moving from one way of being and operating as a society into another one. So I'm looking forward to much more of these types of transitions and cool things that we're going to see in the horizon.
Absolutely, I agree. There's going to be a lot more information to come about. It seems very much reminiscent of the progress that we've been making with cannabis laws. Everything, it's just changing, shifting, evolving every day. So time will tell.
Agreed. Well, Stephen, thank you so much for letting me jump on here and present with you, and for you to come in with those insightful questions, man.
Well, thank you very much for setting all this up. And if anybody has any questions, you can go ahead and send them to support@ampersandaccounting.com, or you can give us a call at 800-931-0994. Thank you very much, everybody. Take care and have a great weekend.
Thank you.